Welcome to the Demise of De Minimis, Navigating Imports at Scale webinar. My name is Adam Lewis. I'm the president and founder of Clear It Customs Brokers. Today, I'm joined by Eitan Buckman, CMO at Freightos, who has been beating down my door just to jump on a call and discuss this topic, as well as James Stewart, the business development manager at Clear It, who's been fielding most of your inquiries about this topic and helping many of you get set up for imports at scale with Clear It. So today we're going to be having an open discussion about the history and concept of de minimis, what challenges importers are facing since its closure, and how we can transition compliantly to imports at scale. So just a quick introduction to Clear It for those who don't already know. Clear It was the very first fully digital customs broker, founded in 2011 as a licensed Canadian customs broker. We obtained our US brokerage certification in 2016, and we've serviced tens of thousands of importers fully digitally across Canada, the United States, and the globe with their North American import needs. So not only do we offer direct importing services for importers and non-resident importers, but we work with forwarders and 3PLs to offer integrated, seamless brokerage services. So let's get started with an overview of de minimis. So de minimis, or Section 321, the concept of it is that, or was that one entity, whether that's a business or a person, could receive one shipment or one package with a value of $800 US or less, without having to have any type of formal declaration required. And that meant that there was no duties or taxes really payable at the time. Now, in theory, if a business or a person were to receive two shipments in the same day, in theory, technically that second shipment would not qualify. But that wasn't always necessarily the case. But the overall theory was that one business or one person can receive one package of up to $800 or less without having those requirements. De minimis, or Section 321, goes all the way back to the 1930s. It was originally put in place because it was more expensive to collect the duties and taxes that applied to certain packages than the duties or taxes that they were collecting. So it was greater than the value that they were collecting. And believe it or not, it actually started at $1 in the 1930s. And it wasn't until, I believe, 1993, where the de minimis was raised to about $200. And then you fast forward to 2016, or rather in 2015, when the Obama administration, put forward some language that raised the de minimis to about $800. And in 2016, that actually went into place. And this is what really underpinned the explosion of B2C commerce in the United States. In 2017 or 2018, I believe it was 2017, when the Obama administration put in Section 301 duties. So specifically, these added duties coming from China, where you would have 7.5% to 25% additional duties on products coming from China into the United States. That exploded the number of packages coming into the US under de minimis at the time, because not only was B2C really taking off with more and more online sellers, but front-loading shipments or bringing cargo into the United States really became ineffective when you have these additional duty requirements. So at that time in 2017, once those 301 duties went into place, we saw an even larger explosion of de minimis shipments coming in. Especially, you had a lot of businesses in Canada and Mexico who were essentially started because of this. So Canadians and businesses all over would bring cargo in to Canada, either paying minimal duties or deferring those duties by bringing it into a bonded warehouse, and then ship it one by one de minimis to the United States. With this came some exposure, and there was a ton of illegal or regulated cargo passing through de minimis, which essentially comes in completely unchecked. There was very minimum documentation required, very, very little inspection, and it was basically a loophole that allowed just tons of cargo to flow through, whether it was valued at $800 or less or more. Regardless, it was still coming through. In 2019, they started a project called Type 86 that tried to collect more information on cargo that was coming in, especially by air and ocean, but it didn't really fix the problem that we were seeing. And then shortly after that, the talk of closing de minimis had come up. This wasn't something that the Trump administration had just done on their own. I believe it was the Biden administration who had discussed the closure of de minimis. And it was ultimately the Trump administration who this year obviously fast-tracked that. And under economic duress, said that they have to close de minimis. First, it was just from China, and then ultimately for the rest of the world. So that is the basic concept and overview of what de minimis was. And now I'll bring in A10 and James, and we can have an open discussion about how the closure is affecting importers and what we can do to transition.
Awesome. And yeah, thanks for that, Adam. Really, really helpful. And hey, James, good to see you here too. Yeah, so Adam, maybe just before we go on, because we've pulled together a bunch of questions that we've gotten from customers, that I know that we've gotten from customers. I know that you're getting from your customers, and James, I know that you're supporting folks with as well. Um, the core place where this has impacted most importers and shippers is folks that used to send out their packages directly to the end customer, usually staying under that $800 limit, or always staying under that $800 limit. And now suddenly it's become really pretty much like financially unfeasible to continue to do that, just with this like new de minimis timeline the charge that's kicking in, right?
Correct.
Yeah, that's absolutely correct. And even we're seeing that actually not just with small businesses, but you're seeing it as the strategy for many large enterprises as well, who are doing cross-border fulfillment. So it's impacting businesses of all size and scale all across the world, really. A non-resident importer could have been sending those packages directly from China, from Mexico, from Canada. Now the requirement is, you have to figure out a way to do it at scale so you can meet the U.S. customs requirements.
Awesome. And I see, one of the things that we've seen over the past, 5 years even, just because, right, the hits keep on coming for importers in different shapes and sizes, is that enterprise organizations typically have different resources at their disposal, right, in order to contend with challenges like this, right? So we saw this during COVID where large multinational importers would, in some cases, even just charter their own container ship, in order to keep products going. And obviously small businesses don't have the same resources at their disposal, and typically are operating on smaller margins where these exact changes can really hit. So that's kind of like as a intro for my first question, which is, both of you guys are working on a day-to-day basis with e-commerce sellers and D2C brands that need to adjust and need to adjust quickly. Right? There's like real significant cash flow ramifications on this as well. So what are the main, right? We talked a little bit about some of the challenges. Maybe before we jump into how companies are adjusting to it, what are the other challenges that most other small businesses are dealing with right now beyond the fact that this is a heavier cost, right? And just like cost more to handle.
Yeah, well, I mean, obviously, like you mentioned, enterprise customers are having an easier time adjusting. For smaller businesses, not as much. They don't have the bandwidth, the budget or the knowledge to necessarily do this. But it's not just these hard costs of additional duties, right? There's these soft costs of that are operational. So number one, going from, kind of a zero compliance landscape to a full compliance landscape, there's additional costs that come into making sure your classifications are correct, your valuations, making sure that you've collected all the relevant data that you need to ship some of these items, right? There were many importers who were shipping products one-off to customers who never had to think not just about the duties and taxes that were applicable, not just about the bonds that they would need, but even added requirements such like, as PGAs, partner government agencies. So, whether that's like USDA, FCC, whatever it is, EPA, sorry. There are all these soft costs that go into that. It's a learning experience for all of them. So it's not just these kind of hard costs of just additional duties.
Yeah, and to touch on that, Adam, there was a really good campaign that UPS had launched maybe about 5 years ago called Hitting the Easy Button. And when they hit that easy button, folks could just use like an integrator, like a UPS or a FedEx or DHL, who, again, do provide excellent courier services and shipping services around the world. But they did not require the customer to have full power of attorney in place and be able to get those products into the United States in a more compliant manner. So as folks are realizing these new requirements, they're shifting their focus from working with those courier companies that were doing fulfillment to now having to work with either a freight forwarding company, a cross-border transportation company, or a third-party logistics distribution facility in the United States. So it really has opened up, the a kind of a Pandora's box for many shippers, especially the small ones that may not have those existing relationships and who are now scrambling to find a warehouse that can provide lower 48 domestic last mile delivery while also ensuring that their cross-border carrier and customs broker are working in concert together to get their goods across the border. So it has caused folks to kind of really rethink not just sending one shipment at a time, but again, to the point of the title of our webinar, how do we do this at scale while mitigating any potential soft costs along the way?
Yeah,
So those are
effectively. No, sorry, Tim,
no,
but
no,
I'm effectively the kind of like DDP model of just shipping out one package at a time to a customer and it just shows up at their door is effectively over.
Yeah. Yes.
yeah, and I think that that's actually so the double whammy here, right? Which really killing people is the combination of now costs more, right? You're paying tariffs on everything, you're paying duties on everything, but maybe in some cases just as expensive. You have to go through the process of clearing each individual package. If you're sending each individual package out, you have to go through the process of getting that, like getting filing customs, paying the flat fees that are associated with each individual clearance,
Yeah.
and just the time that's involved in that. It's just right. It's like easily
It's
10xing the amount of time you spend on each shipment.
it's not feasible. I mean, I have
Right.
customers coming to me. These are relatively new customers coming to me where I mean, that was their entire supply chain, right? They would pack an order, especially in Canada, and just send it one off to the customer. And they're complaining that sometimes some of the costs of delivering a product to their end customer is more than the value
Mm.
of the item they're sending itself. So it's something that's just not feasible. And that's what we've been doing the last few months, really, is getting these importers set up to effectively stop that and completely shift strategies.
Yeah, and Adam, to
So
just
how
touch on that. Oh, sorry. And I was just going to mention that, there's kind of a two-pronged strategy here as well, because there's dealing with the initial impact of having delayed shipments that were not being sent to customers. But then there's also the next evolution of this, which is like, how do I move forward at scale once I've fulfilled all of these back orders or any canceled orders that I had on my books? So moving forward, it may not be the same solution for a shipper, 2 or 3 months down the road that they have right now. Right now, it's more of a panic mode. How do I get these shipments to clients while hopefully not having costs that exceed the value of the product, to Adam's point?
I totally hear that, and I think we see this also reflected on the global side. That you always have these one-two punches of first, how do I deal with the crisis that's hitting me today, and then
Mm.
afterwards, how do I then kind of deal with this on an ongoing basis? And once you have an ongoing process, we're seeing this with like import costs right now from, right, let's say if you look at China to Europe, for example, that really got hit hard by the Suez Canal getting closed, where rates spiked in end of 2023, early 2024, but now are down to kind of lower than they were before the Suez Canal closed, just because once you have a solution and you have a process and you have a vendor that you're working with that it works with, you can kind of settle in. But before we get into the actual solution, what are the specific compliance and documentation issues specifically that are popping up? And then more importantly, when somebody is not ready and does not have themselves set up correctly, what happens to them? What are the ramifications?
Well, where do we start? I mean, like I had mentioned
It's like
earlier, we're
so many
effectively,
issues. Yeah.
yeah, well, we're effectively going from a zero compliance landscape to compliance and overdrive, right? Because along with some of these changes, US CBP has stepped up their enforcement. So you used to be able to, as a broker, obviously, I'm always going to, tell customers, importers, whatever it is, that full compliance is the way to go. But there are always some things that some importers manage to get away with. That's kind of gone away as well. So we're going from a zero compliance landscape to full compliance and overdrive. And really, like a lot of our new customers are really missing out on the very basics. Something as simple as their classification. So their 10-digit HTS classification for the US. Beforehand, when they were shipping with de minimis, anything that kind of like vaguely resembled it and was like 6 digits, maybe something that they got from their supplier overseas, that's what they were putting down. They never really had to put any thought into it. And even if you have a classification that is somewhat close, it was given to you by your supplier, but it's not exact, now that your product is dutiable, a slight variation in that classification can mean the difference between some duty and a significant amount of duty. So getting it right is extremely important. PGA requirements are probably the biggest thing that we're trying to put a focus on now for our customers, because classification, evaluation, country of origin, that's somewhat easy to get a handle on. But when it comes to additional requirements for products coming in, like I mentioned before, FDA, CPSC, USDA, EPA, a lot of customers don't realize that the products they're shipping to the US are actually, fall under these other government agencies. And in order to get them into the US, they now have to make a formal declaration, or rather their broker has to make a declaration along with their customs entry in order for it to pass. So there's really there's a big scramble of really trying to understand, even though you've shipped this product for years, you've had customers in the US for years, you've been shipping it no problem. Many businesses don't have a deep enough understanding of truly what their product is, how it's classified, how it's valued, what other government agencies would actually look after the ultimate release of this product. And look, I mean, if you don't necessarily have these pieces in order, obviously you risk delays, like significant delays. You risk refusals into the US, penalties, and in a lot of cases, what we're seeing is returns. So we have a lot of customers or new customers who are shipping goods down to the US without taking all this into consideration. It would get stuck at the border. They pay all these fees, and eventually, it would just be returned to them because it was either taking too long or they didn't have enough data to actually get their shipment cleared.
Yeah, and to echo what Adam has said there, often Clearit's getting phone calls or outreach from customers who are only finding out about these new requirements when their shipment is on its way to the border. So a trucking company, it has to send that PAPS package down to Clearit USA so that we can get pre-clearance on those items before they arrive. What we have seen is many customs brokers are now requesting that information up to 24 hours in advance. So given the scenario where a trucker picks up the shipment, brings it down from southern Ontario into the Midwest, well, that truck could be at the border crossing within 2 hours. 2 hours is not enough time to dig up a CUSMA certificate of origin or a bill of materials on that product or finding an HTS code. So this puts additional pressure not only on the customs brokers, but on the transportation companies. And one of the things that I've experienced a lot of in the last month here is that the transportation companies won't pick up that cargo to bring it to the border until they know who that customs broker is and they have confirmation of that PAPS release. This is it's a big paradigm shift for how carriers were scheduling their loads down to the United States. Mm-hmm. And your exposure is that much higher when you're using an LTL provider, where you've got multiple shippers who are also dealing with this problem at the exact same time. One of them who does not have the proper clearance could compromise that entire truckload, which results in longer delivery times. It doesn't meet the customer's expectations. And in a worst case scenario where that shipper tries to then pass off the responsibility for customs clearance because the Incoterms hadn't been clearly defined, it could potentially jeopardize the business relationship between those two trading partners. So it's really important for folks to, almost simulate what's going on. With a lot of new companies, one of the things I often recommend to folks is to do a beta shipment. Like if you want to gain access for your products into the United States, it does not make sense to send a full truckload down. It might not even make sense to do an LTL. If you have a small batch of these shipments that are going down to the United States and then they go through the clearance procedures, this is going to give you a more definitive answer as to what PGAs are required, what your landed cost per unit is going to look like. And once you have that information, it becomes a lot easier to scale your business plans.
Okay, so just to sum up what both of you have been saying is that the heavy lift of actually going through the process and getting the right classification and treating each individual small package, as small as it may be, like a full import that goes through the right classifications with the right government agencies. That's really where a major part of the lift is coming in, and that's whether you're importing from Canada into the United States or directly from China into the United States. This is something that is going to hit everybody across the board. And I'm seeing some great questions come in on the chat. Please feel free to use that or to use the Q&A section if you have any questions here. One of the questions that's coming in, and I've heard this from a lot of people, is it even feasible to stay in business anymore? Right? Does it still make sense for us to be in business? And I think approaching it correctly, and hopefully what we'll touch on in the rest of the webinar is yes, and here's how. Right? It's obviously margins can change once duties go up so much, but absolutely still feasible. One of the questions that came in here, and maybe this is a good point, James, I think you mentioned this before. You talked a little bit about Kuzma before, but maybe let's take a step back and explain for a second what exactly Kuzma is, so that exporters from Canada can benefit, and what are the hurdles for qualifying for Kuzma as well.
Yeah, so Kuzma is the Canadian version of USMCA, which is formerly NAFTA. And it's basically an origin statement. It's an origin declaration that your goods are not just manufactured in North America and Canada, US, Mexico, but the majority of their inputs actually originate in Canada or North America as well. So one of the things I'm actually seeing now is that a lot of customers who assumed that their goods qualified for Kuzma or USMCA don't actually. And that even though, for example, I deal with a lot of customers in the garment business who do a lot of their cutting and sewing in Canada. And they had been shipping goods under USMCA for a very long time. But it turns out that they don't necessarily meet the criteria for it. I don't know if you've ever tried to fill out a USMCA or a CUSMA certificate, but it can be quite complex. There's all different criterion that you can qualify for that give you this full duty and tax relief into the United States. If you don't qualify for CUSMA or USMCA, there are alternatives, especially for the garment industry and for textiles. We have something called TPL, and that's a program that's kind of under the USMCA umbrella. It's more of a quota system, so it's not as easy as USMCA or CUSMA, where you're basically just filling out a form. You actually have to apply for TPL, and then you can bring goods that were finished in Canada or anywhere in North America, but the inputs originate elsewhere. You can bring those into the US duty and tax free. But essentially, this is kind of been the saving grace, at least right now, where we saw the US put significant duties on Canadian made products, but those that qualified for USMCA or CUSMA and even TPL, a lot of importers were unsure if originally, once Trump came out and said, okay, well, we're slapping this 25% tariff on you, but if it qualifies for USMCA, then it can still come in duty and tax free. And there's a little bit of a question mark regarding TPL because you have a lot of importers who are leveraging TPL. So the good news is that if your goods qualify for TPL, if you've applied for a TPL if you've applied for TPL and gotten approved, and then for each export to the US, you're going to get a certificate, a TPL certificate, because you have to apply for quota each time. But generally, you tend not to run out. You can
And
qualify
Adam,
for
this
doing.
application would take place through your customs brokerage?
Yeah, it can take place from any customs broker or trade professional. They can help you apply for it. I believe you can actually apply for it yourself. And then there's for each transaction, basically for each shipment, you're getting like a quota certificate. So I have a lot of customers where we've applied for TPL. We'll bring their shipment into the US, and then they're doing an application for TPL after the fact, and it's kind of like a very quick drawback on their duties and taxes.
Yeah, and just another kind of interesting point that I came across earlier today was that the Trade Commissioner Service of Canada is now offering services for folks that have questions about certification requirements under the CUSMA agreement. So we know that many folks have many of the exact same questions or about, either their regional value added content or tariff shifts or anything that would allow them to gain that tariff-free access into the market. So the Canadian government is giving support to businesses that want access into the United States now. And it was a bit short to kind of get that 1-800 number up on a slide. But my hope is when we send out some information after the webinar, we can include a link to that. But that is an invaluable resource that's being offered by the Canadian government to help people navigate that. When it is very complex, when we're talking about something like automotive, where the inputs require a heavy audit trail. This is something that a lot of trade consultants will help clients deal with, like KPMG. There's very well-known, consultants in the industry that can guide folks through it. But if it is a more simplified version and you want to be able to get advice from the trade commissioner, they are there to help you support so you can retain access and grow your business in the United States, which is a welcome development, I think, for a lot of our exporters north of the border.
Awesome. Yeah, and we'll make sure to get those assets out at the end. Seeing a bunch of questions come in here about certification, about some other textile importing. Before we start jumping into the specifics, let's take it at a really high level, right? At the 30,000 feet, I think the money question, which is
Mm.
really what are the main strategies that right now businesses can use to survive de minimis, right? What do they need to do right now in order to keep on ticking and make sure they can focus on their business, not got nightmares from all the customs nightmare headaches that are coming in today.
Yeah, I mean, going back to what I said earlier, number one, investing in the three pillars, what we refer to as classification, valuation, and origin. So number one, having a good understanding of your product, how it's classified, how it's valued when you ship it down, right? So there's a difference between moving product, just importing product directly into the US, whether it's your own product, you're doing a transfer, or you're importing product, or it's been pre-sold. So if you've pre-sold product into the US, you have to value it differently. Having a good understanding of the origin of your product. So we have a ton of customers who are bringing in product from Korea, and they mark it down as country of origin being Korea, but what they don't realize is the majority of those inputs are actually coming from China, and therefore it doesn't actually qualify for made in Korea. So having a good understanding of the full audit trail of all of your inputs for whatever you're bringing in, it seems like a daunting task, but the best thing you can do is just start questioning your supplier. So have a good understanding of the three pillars: classification, valuation, and origin. And of course, as I mentioned before, having a really good understanding if there are any partner government agency requirements for your product. So are any other declarations being made to other government departments at the time of import, and having a good understanding of having all the information that's going to be required. Optimizing your logistics and customs entry structure. So, whether that's, leveraging warehouses, consolidating shipments. So again, rather than shipping one package at a time to customers in the US, where you're going to be paying a brokerage fee, MPF, duties, consolidating those shipments, moving them across the border, and then distributing them to your customers domestically. That saves huge amounts of money. So there's
So
that
that is
consolidation.
this was a big one, and we discussed this one. You and I talked about this at
Mhm.
length. The core takeaway there is drop the idea of shipping in one package at a time,
Yeah.
consolidate, find a local distributor who can help you out with this, or a fulfillment center in the United States who can help you out with this, so that you're only doing one customs clearance for more and more packages, right? And which is actually a very, very dramatic shift in the way that a lot of smaller businesses have been doing their sales so far.
Yeah. Yeah. I mean, that's absolutely right. I mean, you have to understand that with each package that you send out, you're going to have a brokerage fee. And even if that's with like UPS or FedEx that might have like, a relatively low brokerage fee because it's a one-off package. Maybe you're paying, 25 or $35, but that's per transaction. That's each package. You can
Mm.
consolidate hundreds of packages into a single shipment and, pay a $85 or $100 brokerage fee. Obviously, there might be, additional line charges there, but that's maybe, a $2 a line, per transaction line. You're going to save significant amount of money. And keep in mind, there's also MPF, the merchandise processing fee, which has a minimum and a maximum. So you can send, a package with very low value and you're paying the minimum merchandise processing fee, which is something like in the $30, but it maxes out at 600. So if you can bring in, enough that you're maxing out your MPF, there's savings there.
Mhm.
I mean, look, it's really the only way to go now.
Yeah. So
Okay,
there are
so
some there, Ethan, if I can just get Ethan, if I can chime in there, there are some I'm sorry, Adam, did we lose Aiden?
Oh,
Oh, there he is.
possible. There we are.
Um,
sorry about that. My internet just
No, it's
dropped.
okay.
We're good.
I was just going to make the point that there is a silver lining with a lot of this, and as Adam kind of talked about, yes, you're gonna have transactional costs under the old Section 321 or de minimis regime, but as you move forward at scale here, for one, you're gonna have a single customs entry. You're likely going to have to engage in a third-party logistics provider in the United States to help do that last mile fulfillment. But what comes with that is also a much lower last mile delivery cost for those shipments. So if you factor in the fact that before it was moving from, say, a facility in Calgary or Vancouver going into the United States, well, that cross-border rate with those courier companies or those carriers would have been much higher than what a 3PL who's already established and already holds their own contracts in the United States can get you. So when you scale that up over hundreds of shipments, you may find that, it's kind of a bit of a wash. Now, obviously, there's going to be the element of duties, but as you kind of figure out the compliance side of this and get your documentation and paperwork in order, you can also then start to look at first sale rules, right? Which involves establishing a non-resident importer business in the United States and transferring inventory as long as no changes or modifications have been done to it down into the United States. So you have to really look at it from an entire shipment cycle instead of a one shipment at a time to really figure out what that landed cost per unit is going to be moving forward. And with most shippers that we've been working with, when they do this math, they realize that the change in their price point is not as significant as what they would have thought, right? Based upon the
Right.
press releases, I know that they're getting from different social media. But in reality, when you actually have these shipments down in scale in large volumes, you do kind of open up a whole other tier of lower cost per unit to get those to the last mile client. And I think that's something that folks really need to be mindful of because the first ones into the market here who adapt to this new reality fastest are going to be the ones that benefit most. And it couldn't come at a more opportune time as we're entering Q4 here.
Okay, and
Yeah.
yeah, that's a great point, James. In essence, what it feels like we're saying is this is forcing a lot of organizations and companies that may have already been on the cusp of needing to, effectively grow up in terms of their supply chain management and kind
Hmm.
of take that big next jump into making sure that they have 3PLs that are in place and making sure that they have the right customs brokerage partners that are in place as well. Maybe just before I keep on going with my questions, just a couple of, clear the board a little bit of some of the questions that have come in. Um, this is based off of something James that you had mentioned before. How would you recommend new businesses calculating their new landed cost based on all these changes that are taking place?
Well, I mean, you're going to have to do the math, is really at the end of the day, and you're going to have to make sure that you're including all of your different vendors. So, of course, there's going to be the freight forwarder or cross-border carrier component of moving your shipments down in bulk, a customs clearance with which incorporates obviously any sort of duty or merchandise processing fee that Adam was mentioning earlier, and then that last mile delivery. So in the past, you would have looked at the one shipment fulfillment with a UPS or a FedEx rate you had, and you said it's going to cost me $30 or $40 to fulfill this order. What you have to do now is look at what happens when I send 100 of them, because now that freight is moving either LTL or it's moving with a freight company and it's getting down into the United States. And all of those costs from each one of those providers, that's the transportation company, the customs broker, and the third party logistics company doing your bookings, you kind of have to add those together and then divide by the amount of shipments that you have to really get that fixed cost. That can be kind of hard for folks to forecast what it's going to be. We can appreciate that. What I think folks need to do is really take that to heart when I mentioned using a beta trial shipment. Like, let's get this down there, let's figure out what it is. And you're always going to see different price breaks, right? With different service providers based upon the volume that you're shipping with them. So often, to ship 3 packages can be the same cost to ship a pallet. To
Hmm.
ship one pallet can often be, 20, 30% more to ship 2 pallets. So as you learn to scale these things, you'll be able to figure out exactly what it's costing to sell that item to a customer per
Okay.
click.
Yeah, and I've also
Yeah.
actually seen more people, or saw some research, recent research from Shopify vendors, and more companies are selling before they actually have the stock necessarily in place and ready to sell, in order to try to like, encourage bunching while making sure that they communicate to their customers, but kind of like the changes in timelines and expectations for delivery. Thanks for that, James. Adam, a question, something more related. You talked before about the importance of classification, origin, and valuation. Question from Mike here: Are country certifications becoming more important now that compared to what they were a couple of months ago? Is that something that people should be paying more attention to? Should they always have just been paying attention and just the rules have been a little bit more lax because of de minimis?
Yeah, I mean, look, you should have always been paying attention to it, but with these reciprocal tariffs, on all different countries, it's more and more important. And especially, I mean, it might be, not as much to worry about as a small shipper, but we did have, CBP and the DOJ come out recently and talk about illegal transshipment. And the concept of transshipment, is basically you move cargo from one place to another through an intermediary. That's like the general concept of transshipment. But what they mean by illegal transshipment is when you bring cargo from one place to another and it's declared as that secondary or that stop. And whether the cargo itself was modified or even the classification was fundamentally changed because it was cut and sewn or pieced together or whatever it was, they're saying that if you are found to have misdeclared something through illegal transshipment, that not only are you going to have to pay the duties of based on the country of origin with these reciprocal tariffs, but they're now also going to tack on a 40% duty on top of that. Plus, there's a possibility of fines and a whole bunch of other fun stuff. So, look, it's always been important, but more so than ever, we can no longer basically just claim ignorance. So, if you've been, buying product, like I mentioned Korea before, if you've been buying product from Korea and you've never asked your supplier, hey, do these goods do they qualify for originating in Korea, or where are the inputs coming from? Where are the materials come from? If you can't even substantiate that you've ever asked that question, if it comes down to it, if customs, the DOJ decides to look into your shipment, and you're found to have misdeclared, they'll want to see backup. Like, hey, I know your invoice says made in Korea, but did you ever ask them if it's actually made in Korea? Do you
Mhm.
have anything to substantiate that? So more and more, I would say yes, it's extremely important to at least start questioning it.
Yeah, and Adam, just as another one of the strategies that we often hear from folks is that, okay, you've got a 20% tariff put against this country for these goods. Obviously, the first thing many folks will do will go back to that seller and say, look, the reality is there's a 20% tariff. I'm not going to be competitive anymore. Can you reduce your price point that
Yeah.
when we're buying or change it? Now, that's fair enough. That's an honest negotiation that you can have. But it's not a coincidence that on August 29th, DOJ announced a joint task force with the US CBP to target
Yeah.
overpayment. So that means if you've sent $10,000 to a manufacturer overseas and they produce a commercial invoice for you for 5,000, you will be on DOJ's radar. This is
Hmm.
new development, and they're trying to make sure that folks are just not under declaring the value of those products to get tariff relief. It's very
Hmm.
important that you don't fall into this trap. And if a vendor ever tries to give you a reduced invoice to say, hey, we did you a favor, they are not doing you a favor and they could be compromising your business transactions in the
Yeah.
future in perpetuity in the United States. So be
And
very
it's
careful about falling into that pitfall.
Yeah, it's not to scare anyone. It's just, importers should be aware that CBP and the DOJ have become more sophisticated in how they track some of this stuff.
Yeah.
So he's absolutely right. James is absolutely right. But as he mentioned, negotiating pricing is, a legitimate thing to do right now, as your costs go up. So, vendors overseas are just as afraid of losing business as you are. Like, take this opportunity, given, the current landscape, to try and renegotiate your pricing. Any reduction you can have in pricing is less than you're going to have to, is less than you're going to spend on duty. So that's a good thing.
On tariffs.
Yeah.
Yeah. So, a couple of the questions here. Try to get through some of these quickly. Are express carriers in general still viable? This is specifically a question asking about a company that uses express from Latin America to the United States, not direct to consumer. Has the viability of express carriers changed?
I
I
mean, I
think
would say they're, yeah,
go
go ahead,
ahead.
James. No, go
I was
ahead.
going to say the viability of them acting as an integrator, which really encompasses everything, right? It's from door to door delivery, includes customs clearance. Companies tend to be really good at one thing or another. And I mean, when it comes to FedEx, they kind of wrote the book on the hub and spoke model and fast distribution. The problem can be sometimes that if those integrators and their customs brokerage division are being burdened with the documentary requirements that put place by US Customs, it may not be in your best interest to use that. And the truth is, you should be maintaining continuity with US Customs. So that means if you're using one integrator one week that uses one HS code and another integrator the next week that's using another HS code, this can cause you problems down the road. The nice thing about having your own customs broker, and this isn't meant to be a sales pitch for Clearit, it's for any customs broker, is that broker will maintain a portfolio for you of all of your product and help advise when there's a conflict, when there's anti-dumping duties, when there's a countervailing duty. Having a standalone customs broker has never been more important. And we know that because we are fielding record amounts of inquiries and calls with Clearit on both sides of the border as people seek to navigate this new reality in regards to customs compliance. So obviously those companies provide a spectacular service.
Hmm.
However, when it comes down to the nitty gritty, you have to make sure that you're working close with your customs broker as you are with your vendor to make sure that you have all of the documentation and information you need to be prepared for an audit.
Okay, so
Yeah.
a valuable tool, not necessarily the only valuable tool, is what you're saying on that front.
Right.
Adam, a different direction here. We've talked, and you've mentioned a little bit about multi-line shipments. How do you handle multi-line shipments with multiple importers or consignees in one master entry, or is this too in the weeds?
I would say that's more of a question for some of our operations folk, if you want to get into the nitty gritty. But I mean, look, Cleared is a full service customs broker. Whether you have multiple vendors, I mean, we can handle just about
Anything.
anything that you throw at us. Obviously, some pricing might change slightly. So if you have multiple vendors with multiple invoices, even if it's consolidated, we might, there might be an invoice header line. But I mean, it's traded
Okay.
through the
Your
same.
answer
Yeah.
is you handle that. instead of the importer
Yes,
handling it. It's a good,
correct.
it's a good answer.
Yeah, just send
And
it
I
over.
think
We'll
that's
take care
a
of it.
yeah, and I think that's a good segue to kind of make the clarification between a consolidated manifest and a consolidated invoice. So a
Yeah.
consolidated invoice should have grouped items grouped by HS code and country of origin. So I'll give the analogy. If I'm a manufacturer of mugs and I sell 100 mugs into the United States every week, well, I don't have 100 lines of entry. I just have one line of entry as a mug manufactured in a specific country. Now, if half of those mugs are manufactured in China and half of them are made in Korea, then I really have two lines of entry. This is another thing that's impacting customs brokers is that they're getting the consolidated manifest, which is a summary of all orders that have been made to that supplier who then needs to fulfill it into the United States. So the question is, do you want to have two lines of entry on your customs invoice, or do you want 100 lines? And I can tell you that when you're trying to control costs under this new customs
Yeah.
regime, you want to do your best to consolidate that information into an invoice that puts a reduced burden on the customs broker. Again, giving that analogy, we only have 1 or 2 hours before that truck crosses the border to get that entry keyed. When you get a multi-page invoice, I know it's something that causes a lot of anxiety with our brokers, in which case we will go back to them and ask them or provide them with a template for a customs invoice that amalgamates it again by HS code and by country of origin. This will help streamline the customs activities and hopefully reduce costs for those shippers.
Yeah.
Awesome. Yeah, a couple of other questions here, but I just want to get to two other questions that I had had, and I get to control the screen, so I'm going to decide which questions we do. Um, uh, is this actually the importer's responsibility, or is this exactly why most people are, tagging in 3PLs and freight forwarders, and should they just be handling it instead?
Is that the question?
That is the question. Who
That
should be
is,
handling it? Whose responsibility is this?
Well, when you're saying it, are you talking
Right?
about, or what are you referring
Handling the
to
customs
exactly?
compliance,
That is
around de
absolutely,
minimis.
so that is absolutely on the importer of record. Whoever is taking legal responsibility for this shipment moving into the US. Now, that can be a non-resident importer, so you can be a business based in Canada, based overseas, wherever it is, and you've registered as an importer into the US, or you can be US based. But as the importer of record, essentially, whoever has engaged the customs broker, um, it is your responsibility to provide at the time of entry accurate information regarding, again, regarding the classification, valuation, origin, and PGA requirements. Now, that is the reason why it is good to engage early and often with a customs broker or a trade professional to make sure you've created a database for yourself. You want to be able to provide your customs broker, so you being responsible, you want to be able to provide your customs broker with what we refer to as a customs ready invoice. All the information is there. Nothing is missing. We're never going to have to go back to you as a customs broker. We're never going to have to go back to the importer and say, can you clarify this? Or can you provide me with the country of origin? Or this classification doesn't make sense. You told me you're bringing in ballpoint pens with this classification, but according, that actually applies to leather wallets. So it is up to you to provide all this information, but you need to leverage customs brokers and trade professionals to make sure you have the right information. Does that make sense?
yeah. Yeah, that makes sense, Adam. And I think that one key thing about that 3PL or forwarder that you're working with is that they also need to be involved in this. They need to know who we are or who your customs broker is. By having them designated as the notify party so that clearances can be done, a forwarder needs to understand that it is going to require to clear customs. And if that forwarder is using a carrier and that carrier doesn't know who your customs broker is, you are going to experience delays even if you've gone and done your due diligence. So it's really important that everyone understands who the parties are in the ecosystem. That way, documentation can be received on time and delays can be mitigated.
Okay. And another question around responsibility or interactions between forwarders and customs. A question that came in from Sunny here. Do customs brokers clear shipments that are sent in by courier? So if somebody's using a courier like UPS or FedEx,
Yeah.
do they need to use the courier's in-house brokerage, or are they able to use an external brokerage like Clear?
I cannot tell you how many customers we have gotten, especially in the last few months, because couriers like FedEx and UPS, they weren't built to handle these kind of sophisticated entries. I have many customers calling me saying like, "Hey, I sent an $800 package down to the US and I got a $1,400 bill." This is a true story that was from just a couple of days ago, and I got a $1,400 bill. And he knows that it's incorrect, but they are, first of all, UPS and FedEx, their brokerage departments, it's very hard to get someone on the phone. And he effectively had to pay that bill because they were saying it's going to be returned to sender. So he couldn't get in touch with FedEx on time, or UPS, whichever courier it was. He couldn't get in touch with them on time. He had to pay that bill so that his customer can get the product. It was a time sensitive piece that he was sending down. And now he's in kind of like a fight with them, a back and forth, trying to go through, different channels to, essentially get 75% of his money back,
Hmm.
because at the end of the day, they misclassified the product. They charge an inappropriate amount of duties. The brokerage fee was sky high, charging them all these different line items that just didn't make sense. So yes, Clearit can clear parcel shipments. That's not a problem. Now, it can be difficult, at least for the first time, to have that courier mark down an outside broker. We have to remember, a lot of their revenue actually comes from the brokerage piece. So you'd have to contact, once you've booked a shipment, you would have to contact that courier and make sure that you have it marked down on an account level. The Clearit or any other customs broker is your broker, and to assign it to them. And once that's done, it's very easy for us to receive the documentation, and then we key it in, and it's easy.
Yeah, and
Okay.
that responsibility really does fall on the party that's making that booking. So whether it's a drop ship scenario or whether it's coming into Canada or the United States, typically when you're booking on those platforms online with the courier companies, it'll give you the option for broker select where you can put your broker information in there. If it's not there, if you're using a multi-carrier platform that's amalgamating different parcel providers, typically you'd want to put it on special instructions. So a lot of the systems still have not really updated themselves to account for this new requirement. So if you don't want a courier company to do your customs clearance and you'd prefer to have it going to the same broker every single time, it's advisable to either indicate it on your commercial invoice or on the shipping documentation. It can be a lot harder to track it down after the fact. If they've already done the entry, we can't have them cancel the entry and then send it to another broker. This will just slow things down. So it's advisable to be proactive in that regard, Ethan.
Awesome. And then, one of my last questions that I wanted to touch on, maybe ending on a little bit of a positive note here. We're going to try to keep it short. What are the strategies that businesses can use to really take advantage of the new market opportunity that the de minimis elimination, like, are there? Am I just trying to be overly optimistic? Are there strategies that businesses can take to really take advantage of this change?
Yeah, I mean, look, it's a lot of what we had already spoken about. So obviously taking, again, going into the three pillars: classification, valuation, origin, having, um, customs ready invoices, negotiating your pricing, consolidating. Like, this is the big one, right? I think after this, we're going to be sending out to all of you here. We're going to send you our playbook on how to transition from these kind of one-off parcels to consolidating your shipments, how you go about it, how you need to value your cargo, what type of providers you need to work with to do that. But look, I mean, this is basically something that is, should be spurring you to make all these kind of, small changes. You should be looking to save money anywhere you can now in order for your business to still be viable. And even if that means like changing your forecasting so that you can start using cheaper modes of transportation. I know plenty of customers who are consistently using air freight to bring cargo in because they're not doing proper forecasting, and they kind of need these emergency orders all the time. Do your forecasting, maybe switch to ocean. You're going to save yourself a lot of money. Leverage duty recovery. So I think it's something. I think in the United States it was something like $7 billion went unclaimed in duty drawbacks last year, or in the last, maybe the last time they put that out there. So there are billions of dollars in drawbacks where if you're bringing something in to the US or Canada and then re-exporting it, you're eligible for a duty drawback. You can get that
Mm.
drawback, those duties back through a drawback, and you can work with Clearit or any other customs broker trade professionals to have that done. There's also a lot of like automated softwares now that can help you do that.
Yeah.
And if you're sophisticated enough, and it's, you don't have to be sophisticated, but leveraging bonded warehouses and free trade zones. So minimizing your kind of upfront costs. If you bring it into a bonded warehouse, you're deferring your duty and paying the duty once it's removed for consumption. Keep in mind the main difference between a bonded warehouse and a free trade zone really is that once your goods go in a bonded warehouse, once you remove that product, you're going to be paying the duty at the time it was removed. Whereas a free trade zone, when you bring product in and you take it out, when you take out that product, you're going to be paying the duty at the time it was entered. Now, beforehand, didn't really make a difference, but considering right now or in the last few months how quickly things have been shifting, it makes sense
It makes a difference.
Yeah, it makes a big difference.
Yeah. And just to touch on that point, Adam, I know we talked about like the reactive in the interim, what folks are doing to manage customers' expectations. And, the folks that make it as easy as possible for US customers are going to be the ones that win. So
Correct.
my quick 30-second answer to most folks is what do I do next is, take that 20% of your orders that are 80% of your inventory and think about front loading them into the United States.
Mm.
Once those shipments are shipped directly from that 3PL and brought in bulk, you're going to be able to offer very competitive delivery rates to your customers. But if those shipments are already pre-labeled and going down to the United States because they've already been sold, you need to use the transactional value of those shipments to get them into the United States. So I typically am advising folks, think about if you could forecast your orders 1 to 2 weeks in advance for what you expect to sell through your e-commerce channels, through your Amazon store, and get them into the United States so that the customer that's buying your product sees minimal disruption. Obviously, 1-star reviews are brutal. Nobody wants that. And that's what happens when folks pay for something but don't get it when they were expecting it. So one of the ways that you can manage that customer's expectation is by making sure the inventory is available at a moment's notice, and then look at your exceptions. The one-off orders you only see once per month, that might be a little bit further delayed, but at least you'll be able to be reactive and keep your customer base happy and loyal in the meantime.
Yeah, that's great advice.
Great. Yeah, so just some quick takeaways, just we're at the last minute of this webinar here. Some really quick takeaways from my perspective. The increased duties is one headache, but the other one is just increased compliance and then the necessity. Adam, you and I talked a couple of days ago about how when you're crossing the border, suddenly you're seeing more helicopters between
Yeah.
Canada and the United States.
Yeah.
Just a whole lot more enforcement, a whole lot more compliance, task forces that are being created. Really, the point is right now to double down and don't be penny wise pound foolish. Trying to find shortcuts long term will not work in your favor.
Right.
You got to step up your game, work on the compliance angle, and make sure that you're following what Adam talked about. He broke it down into classification, the origin audit trail, and evaluations. Making sure you're working with the right partner, government agencies, and that of course that you're optimizing the structure, of your imports, whether it's on the consolidation side, working with new 3PLs. James shared some great advice about that, as well as talking a lot more about calculating landed costs and some general tips that we have for working with customs brokers. In general, I think everybody here, you've already taken the first step, which is making sure that you're more informed, making sure that you're staying, tapped in, speaking to the right people and asking the right questions. On the Freightos side, you're always welcome to head over to Freightos.com and search to just get a good read for what the current market is for international freight. I think, that's one good news, which is that rates are dropping pretty seriously. But in general, as you can see on your screen, if you are shipping a fair volume of packages monthly into the United States, definitely reach out. As you could hear from the call, James knows this stuff backwards and forwards. And either way, if you head to clearitusa.com, you could see a playbook that the team has put together. James and Adam has put together on how to handle the end of de minimis. So you could just look at the blog on clearitusa.com. James, Adam, thanks so much for taking the time. Really appreciate it.
Thanks,
Yeah,
Ethan.
thank you.
Great discussion.
Awesome.
Thanks for hosting.
Awesome. Thanks, everybody. Have an awesome day.
Thank
Okay.
you.
Bye, everyone.